Welcome back, my friends. The news today is that Angola has decided to leave OPEC. Oil prices slipped on international markets as the news was announced. Oil prices settled lower on Thursday after Angola said it would exit the Organization of the Petroleum Exporting Countries, OPEC, raising questions about the producer group's efforts to support prices by limiting global supplies. Brent crude futures settled down 31 cents at 79.39 a barrel. U.S. West Texas Intermediate crude futures fell 33 cents to 73.89 a barrel. Earlier in the session, both benchmarks were down by more than $1 after Angola said it was planning to leave the group. But before we get into all of that, please hit the like button and leave us a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. And before we continue, a word from the sponsor of this video. Today's sponsor is ProWorldNet.com. ProWorldNet.com is a job website specifically dedicated to licensed professions. Doctors, including any type of specialty. Nurses, and that includes all grades of nurses. Lawyers, regardless of area of legal focus. Teachers and professors, from kindergarten through graduate school, as well as any kind of job that requires a government license or certification. And ProWorldNet.com also includes short-term gig-type jobs as well. So be sure to check out ProWorldNet.com if you are looking for a job or an employee. For those of you not familiar, OPEC is a grouping of oil producers, which decides how much crude oil to sell on the world market, along with an expanded group called OPEC+. Angola has announced it is leaving the oil producers organization OPEC over a dispute on output quotas. It follows last month's decision by the 13-member cartel and 10 allied nations to further slash oil production in 2024 to prop up volatile global prices. Angola currently produces about 1.1 million barrels per day, of the 30 million from the whole of OPEC. Oil prices fell on the news, with Brent prices down over $1 to $78.5 a barrel by 12:50 GMT, Reuters reports. Angola's decision to withdraw from OPEC came at Thursday's cabinet meeting. We feel that at this moment Angola gains nothing by remaining in the organization, and in defense of its interests, it decided to leave, Mineral Resources and Petroleum Minister Diamantino Azevedo said afterwards. If we remained in OPEC, Angola would be forced to cut production, and this goes against our policy of avoiding decline and respecting contracts. The minister added that the decision was not taken lightly. Angola and Nigeria are the two biggest oil exporters in sub-Saharan Africa. The AFP news agency reports that both countries have been unhappy at being asked to cut production at a time when they need to increase their foreign currency earnings. Angola has vast mineral and petroleum reserves, and its economy is among the fastest growing in the world. But economic growth is highly uneven. Much of its oil wealth lies in its separate Cabinda province, where a decades-long separatist conflict simmers. Angola, which had been an OPEC member for 16 years, is not the first country to leave the cartel. Ecuador, Indonesia, and Qatar have all done the same. Angolan Oil Minister Diamantino Azevedo said the country's membership in OPEC was not serving its interests. The Saudi-led producer group in recent months has been rallying support to deepen output cuts and boost oil prices. It seems like OPEC is losing the battle to keep prices higher, said Matt Smith of shipping tracking firm Kepler, noting that non-OPEC producers like the U.S. have stepped up to fill the supply gap. Angola produces around 1.1 million barrels per day, BPD, compared with 28 million BPD for the whole group. The country's exit raises questions about the cohesion and direction of OPEC, even though it is one of the smallest producers, and its departure may have a limited impact on global supplies, Smith said. At a meeting in November, Angola had protested a decision by OPEC to cut its production quota for 2024 to help prop up oil prices. Separately, the U.S. Energy Information Administration, EIA, said U.S. crude output rose to a record 13.3 million barrels per day, BPD, last week, up from the previous all-time high of 13.2 million barrels per day. The U.S. is poised to increase production in the Permian Basin and across the country, said Tim Snyder, economist at Matador Economics in Dallas. We've mitigated price risk here in the U.S. and really put the Russians and the Saudis back on their heels, Snyder said. Recent attacks carried out in support of Palestinians by Yemeni Houthi militant group on vessels headed towards Israeli ports have forced major maritime carriers to steer clear of the Red Sea, causing global trade disruptions. With such a heavy load of U.S. crude reported in increased measure, one can only assume that the market remains edgy in regard to supply diversion, or even hiatus caused by the Houthi attacks on shipping, PVM analyst John Evans said. The conflict between Israel and Hamas intensified on Thursday amid truce talks. Following Russia's full-scale invasion of Ukraine in February 2022, oil prices soared, hitting more than $120 a barrel in June last year. They fell back to a little above $70 a barrel in May this year, but have steadily risen since then as producers have tried to restrict output to support the market, and after recent attacks on cargo vessels in the Red Sea. But what do you think? Please hit the like button and leave us a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Please share this video on social media. Thank you for watching.